You know, it's always fascinating, isn't it, watching these huge tech companies navigate everything that's changing.
It really is constant evolution.
Exactly. So today we're going to do a focused deep dive into meta platforms, Facebook, Instagram, WhatsApp.
The whole family.
Right. You asked us to look into their stock, so our mission here is pretty simple. Pull out the key insights from, well, the latest analysis, the earnings reports, news, all that stuff.
Yeah, cut through the noise and give you a clear picture of where Meta stock is, like right now.
Let's do it. So where do we start? The price.
Okay, yeah. So the recent stock report we looked at, it had Meta closing at $599.27 USD.
$599.26. Got it.
But then the report gives this fair value estimate of $626.46.
Okay, so fair value.
Sure.
That's like what the analysts think it should be worth based on the fundamentals.
Exactly. Suggests maybe a bit of upside potential there. But interestingly, the report's own price target, what they call our price target, is actually a little lower at $595.14.
So a slight difference there. And just to get a feel for its movement, what's the recent range been like?
Well, it's had quite a swing over the past 52 weeks. The low was $442.65, and the high actually touched $740.91.
Wow. Yeah, so definitely some volatility, not just a straight line up.
Not at all. But we are talking about a behemoth of a company, right? The market cap is staggering, $1.51 trillion.
Trillion. It's hard to even picture that, I know.
And the enterprise value, which, factors in debt and cash too, is right there as well. 1.53 trillion TTM trail of 12 months.
Okay. And valuation metrics, like PE ratio.
Right. So the standard PE ratio is sitting at 22.73. The forward PE, looking at expected earnings, is slightly higher at 23.58.
Which seems reasonable, I guess, for a tech giant.
It's in the ballpark. But what's really interesting, I think, is the consensus from analysts. Over the last 6 months, their average price target is way up at $721.44.
$721. Okay, so analysts covering the stock are generally much more bullish than even that fair value estimate we saw.
Overwhelmingly so, yeah. It suggests a really strong belief in where Meta is headed.
And that optimism, it seems like it's backed up by their recent numbers, right? Q1 2025.
Definitely. The Q1 results were pretty impressive. Revenue came in at $42.3 billion.
Billion, and that's up how much?
Up 16% compared to the same quarter last year. Solid growth.
And profitability. Operating income.
Also strong. $17.6 billion in operating income. That translates to a very healthy 41% operating margin.
41%.
Wow. Yeah. And looking broader, net income over the last 12 months, $66.64 billion.
Okay. So the money machine is still printing. What about earnings per share?
EPS, right. TTM, so trailing 12 months, is $25.59 per share. Looking forward, the analysts expect around $25.41.
Pretty consistent there.
And they're generating cash like crazy. Free cash flow in just Q1 alone was $10.3 billion.
It just sounds like that core business, the family of apps, Facebook, Instagram, WhatsApp, Messenger, is just firing on all cylinders.
It really is. That segment saw the same 16% revenue growth we mentioned for the whole company. But get this, the operating margin within that family of apps segment.
Higher.
Much higher, 52%.
52, that's incredibly efficient.
It absolutely is. And it's all built on, well, just a massive user base that's still growing, believe it or not.
How many people are we talking about daily?
Daily active people, DAP, across the whole family. 3.43 billion as of March 2025.
3.43 billion daily.
Yeah, think about that. Nearly half the planet using one of their apps every day.
Yeah.
And that ad revenue, also up 16%. It was driven by both, showing more ads, so impressions were up, and charging more per ad.
Okay, so the foundation looks rock solid. But the big narrative, the big spending story, seems to be AI, artificial intelligence.
Oh, absolutely. That's where the huge investment is going. They significantly bumped up their planned capital expenditure for 2025. The outlook is now between $64 billion and $72 billion.
64 to 72 billion just this year on CapEx.
Yep. And they're very clear. Yep. Most of that is going towards AI infrastructure. We're talking data centers, specialized chips, the works.
So they're making a massive bet that this is the future.
Management sees it as absolutely critical, like the key competitive advantage moving forward. They believe having the best AI tech will be the main differentiator.
And are we seeing this AI stuff actually show up in the products yet?
We are, yeah. The Meta AI Assistant, it's popping up across their core apps. They even launched a standalone AI app. and they're constantly pushing forward with their llama models.
Llama, right, they're foundational AI models.
Exactly. And this isn't just theoretical stuff. AI is already um, improving things like the recommendations you see on Facebook or Instagram or even Threads. Makes the feed stickier, keeps people engaged.
Okay, so better user experience.
And it's helping advertisers, too. They have this thing called the generative ads recommendation model. Basically, AI helping create and target ads better, which means better results for the businesses spending money there.
Makes sense. Okay, let's shift gears a bit. Reality Labs, the VR division. Still a big part of the story, but maybe a different kind of story.
Yeah, a different story financially, for sure. The Q1 report showed another significant operating loss there. $4.2 billion lost in just that quarter.
4.2 billion. That's a lot of red ink. It's a huge ongoing investment into that metaverse vision, right?
It really is. It highlights just how long-term they're thinking about VR and AR as, the next potential computing platforms.
Yeah.
A massive ongoing bet.
But are there any bright spots in Reality Labs? Anything gaining traction?
Well, yes, actually. The report did mention their Ray-Ban Meta AI smart glasses. Apparently, sales tripled, and the number of people using them monthly quadrupled year over year.
Tripled sales, quadrupled users. Okay, so that's something. A niche, maybe, but growing.
Seems like it. So, yeah, still losing a ton of money overall in the division, but there are these little pockets maybe showing some promise or at least user interest.
Okay, let's talk about competitive advantage. The report uses the term wide economic moat. What exactly does that mean for Meta?
Right, the moat. It's basically what protects their business from competitors. For Meta, it's overwhelmingly about the network effects of that family of apps.
Network effects, meaning the more people use it, the more valuable it becomes for everyone.
Precisely. With, like we said, over 3.4 billion people using their apps daily, it becomes almost indispensable for communication, for staying connected. And for marketers, where else can you reach that many people so easily?
Yeah, it's hard for a newcomer to just replicate that scale overnight.
Extremely difficult. So that user base is moat number one. And then their expertise in AI, especially for advertising and recommendations, that's becoming another core part of their advantage. They're just very, very good at it.
Okay, strong moat.
Yeah,
But no company is without risks or challenges, right? What are the main headwinds mentioned?
definitely. The big obvious one is those continued material losses in Reality Labs. That level of spending can't go on forever without showing a clearer path to actually making money.
Right, investors will want to see progress there eventually. What else?
Regulation is a big one. It's always hovering. Specifically, the report flags the European Commission's recent decision about Meta's subscription for no ads model in Europe.
Ah, the payer okay model?
Exactly. The decision around that could potentially impact their European business starting in Q3 of 2025. So that's a near-term regulatory thing to watch.
How they adapt their business model there will be key.
For sure. And then, there's always the broader macroeconomic picture. Uncertainty there can always impact ad spending, which is Meta's bread and butter.
Makes sense. So we mentioned the average analyst target earlier, but were there any recent specific changes, like individual firms adjusting their outlook?
Yeah, there were several recent adjustments noted, mostly positive, actually. Tigris Financial bumped theirs up significantly to $935.
$935?
Yeah.
Wow.
Yeah. Argus Research went up to $775. JMP Securities to $750. RBC Capital to $700. All increases.
Okay, so a lot of upward revisions reinforcing that positive sentiment. Any downgrades or lowered targets?
There was one mentioned, Scotiabank lowered their target, but still to a pretty respectable $583.
Okay, but overall, the trend among those recent changes seems quite positive, aligning with that high average target of $721.44 we talked about.
Exactly. It paints a picture of analysts, on the whole, liking what they're seeing right now and the direction things are headed, especially with AI.
All right, so let's try and wrap this up. If you had to boil it down, what are the main takeaways from this deep dive into Meta's stock situation?
Okay, key takeaways. Number one, the core business, advertising on the family of apps, is performing really strongly. Good growth, very profitable.
Solid foundation.
Right. Number two, they're making an absolutely massive strategic investment in AI. It's a huge bet, but the market seems to view it positively right now, seeing that long-term potential.
The big AI push.
Number three, Reality Labs is still the big question mark. Huge investments, significant losses, potential is way out there. But it remains a high-risk, high-reward kind of venture.
The long game with associated costs.
Yep. And number four, watch out for regulatory headwinds, especially that situation developing in Europe. That's a potential near-term challenge.
Got it. So strong core, big AI bet, costly VRR gamble, and regulatory hurdles.
It sums it up pretty well. The overall outlook, based on Q1, the guidance, the AI focus,
Mhm.
it seems generally positive. But execution is everything, right? Especially with AI and navigating those regulations.
Absolutely. So there you have it, a pretty focused look, we hope, at Meta's current stock picture,
Hmm.
pulling from that analysis and recent news. It's really a tale of this dominant core business trying to build its next act with AI while juggling the metaverse dream and regulators.
Which leaves us with maybe a final thought for you, the listener.
Yeah.
Thinking about that huge AI investment, what do you think is the most probable way AI fundamentally changes Meta's business? Will it supercharge the existing apps or enable something entirely new? It's definitely something to mull over.
It really is. And hey, if you found this deep dive useful, if it helped you get a clearer handle on Meta stock, please do consider subscribing to our YouTube channel. We do these focused breakdowns regularly.
Yeah, and hitting that bell icon really helps us out. It lets you know when we drop the next analysis. And honestly, your support is what keeps us going and allows us to bring you these insights.
Absolutely. Thanks so much for tuning in.